Welcome to a special market update. We're going to continue our coverage of the S&P that we started a couple of weeks ago, where we talked about the S&P was at a major support area, and we've gotten a lot of emails and requests for a follow-up, so we want to do that now. And just to refresh your memory, what we were looking at, what I was actually looking at, was this monthly chart. And again, this is kind of recapping what we talked about a few weeks ago to bring you up to speed. And this was a major resistance area on this monthly chart. And one of my favorite indicators, change of polarity, where multi-tested resistance, once broken, as it was over here, becomes support. So we were looking for potential support anywhere between the 1575 and maybe 1540, 1545 area. And when we did our last update, it was latter part of June, early July, and the market was in the support zone. Has tested the support zone, was starting to move up, and so we were, I was still long-term bullish. And actually, this brings out. Let me go back here. This brings out an important point that I do want to mention. A little story on over here. A few weeks ago, I was actually at an affair wedding, and somebody asked me what I thought about the market, and I said I'm really bullish on the market because it broke out of a multi-year resistance area. It looks like a decade-long, more than a decade-long resistance area. It broke out of a trading range, and so he said, "Oh, how high do you think it's going?" And I'll give you my numbers later on for my upside objective, but I was quite bullish. I still am, but I had mentioned that doesn't mean the market can't sell off first. When somebody asks an opinion of me, an opinion about the market, I'll say, okay, this is my target, but this is my support area, because I don't want people to think that, okay, just because I'm longer term bullish means the market's going to go straight up without the risk of it going down. So I'd mentioned that, okay, although the market is strong here, I'm still longer term bullish, but that does not preclude the possibility of the market selling off. And indeed, that's what did happen. So getting back to this daily chart here, when we were looking at the market at a major support area, and I was saying we're still longer term bullish, the market since then has had a very nice rally, and I want to bring you up to date on what I'm looking at now. We're now at a resistance area set over here by this doji, almost a bearish engulfing pattern over here, and you can see the spike high right over here. Now, no bearish reversal signals, but notice how the real bodies are getting smaller and smaller. So that puts the trend, it's still up because we have white real bodies or green real bodies, but the momentum may be flagging a little bit, but I would not turn bearish yet until we get a negative candlestick signal, or even a candlestick signal that turns us neutral. So for example, that would be a doji like we had over here, or if we get a bearish engulfing pattern. But just because the market's at resistance doesn't mean the market's going to pull back, so I would be looking for a potential reversal signal out of the candles. If it doesn't happen, then no reason for being very nervous here. Something like this, what I would do is, if you're long from the low levels where we talked about being bullish, maybe take some profits up here, but I would still stay net long and exit positions. Again, this is from a trading perspective, exit positions if we get a bearish engulfing pattern or a long red candle. But going back to where my target is, I'm still very bullish long term, with a caveat that if the market closes under 1540 on a weekly basis, I'm wrong. But what I'm doing is taking this trading range and actually being a little conservative here. I'm taking this as the bottom of the trading range rather than here. So we're looking at about 700 points or so, or actually 800 points or so added to the breakout points, added to the breakout point about 1550, 1575. So that gives a target above 2300 actually. But I would be looking at first resistance, obviously on this daily chart, we're right near there. And then second, I would use the psychological level, a little longer term, about 2000. So kind of to recap, still very bullish longer term. Caveat is if we get a weekly close under, if we get a weekly close actually under this level here. You see, although this is a support zone based on the monthly chart, notice how the market held back in April. The lows here right around the 1530 area. So I'm still very longer term bullish, looking for over 2300 in the cash S&P. Once again, that does not preclude the possibility of the market selling off, but I will only change my longer term bullish stance to bearish, to neutral bearish on a close under the lows here under 1530. Now, as a little special thank you for being a loyal member of the CandleTrust.com family, what we're going to do is provide you with a free access to our private roundtable, and that will be this Thursday. I'll give you details about it in a second. That'll be this Thursday at 8:30, and it's going to be recorded and sent as shown here to registrants. And essentially, you'll have the ability to ask me about any U.S. or Forex market of your choice, and I'll give you my forecast, my analysis, where I look for support and resistance, and to give you some potential trading opportunities. And this is a great way to learn how I personally analyze the markets. And at the session, you'll also learn how you can have access to our analysis for markets of your choice twice a week. So be sure to register, and even if you can't attend, this way you'll get a video automatically of the markets that I did analyze, and you may get some trading ideas from that.